Hi all, and welcome to the series of lectures of financial accounting and analysis. I, Dr. Shikha Jalota, welcome you for this session. In the previous sessions, we talked about the final accounts, the preparation of final accounts, how to prepare it. We talked about the trading account, P&L account, balance sheet. We saw the formats, how to prepare the trading account, the format of P&L account, balance sheet. Now we'll proceed further with the numerical question based on it. As theoretically we have covered up these things. Now we'll see how to proceed it with the question. So let's take up the question here. This is the illustration I have taken. It will be easier for you to follow up as I have taken up the solution also for you to better understand the format, and then we'll take up the unsolved questions in the next classes. So let's see the question first. It says, from the following balance extracted from the books of Messrs. Rajendra Kumar Gupta and Company, pass the necessary closing entries, prepare a trading and P&L and balance sheet. Okay, so we have to prepare. Basically, we'll avoid the entries, journal entries here, and we'll take up the question for trading and P&L account and balance sheet. So let's take up the entries here. It says there are a number of entries given here for the trading and P&L account. We'll take up the entry one by one, and then we'll see what all entry where it has to be considered. And last, you can see here the value of stock on 31st December 2008 was given. So I will tell you accordingly that where to put up the stock here. But as far as I know, you must be remembering in the previous session, we talked about the opening stock and the closing stock. And I guess you remember that we put up the stock in the trading account. But since the stock is given out of the box of informations given in the question here, so any information which is not given in the box or in the trial balance, or it is given outside the trial balance, then or given under as the additional information, for that you have to make the entry at two places. So for sure, this stock will appear in the trading account, and also along with that it will appear on the balance sheet asset side as the closing stock. So this we'll discuss at later stage when we'll be solving the question. So let's take up the formats: trading account, P&L account, and balance sheet. I would suggest you to keep on preparing the trading and P&L account separately, and the balance sheet we will take up at the end. This is usually what I do, but you can do the things as per your convenience. And if you know how to prepare the trading P&L account and balance sheet, then of course you can do at your pace also. But for me, those who are the learners, those who don't have much idea about trading in P&L account and balance sheet, then they should follow me, and we will start with the question now. So first thing, for the trading and P&L account, prepare the formats. I think you all have prepared the formats. So trading account format and then P&L account format. These two formats prepare simultaneously. We will put in the entries, and then later on we will make the balance sheet. So let's take up the trading account first. Trading account, you all know very well that we need to put in certain set entries in the trading account first, and then we'll see what all other informations that need to be mentioned in the trading account. So trading account usually starts with the first entry, that is to opening stock. So first see, opening stock given here is 1250. So we'll mention the first entry of trading stock under trading account is 1250. Then we'll check sales 11,850. So we'll mention the sales, but before mentioning sales, final figure in the final column, first check whether there is any sales return given in the question or not. So I can see here there are sales return not given, but there are given return outwards and return inwards. So return outward and return inwards here, you can see on the right side of the box here. Return outward is with the returns which is going out of the business. So outward return here means purchase returns, and return inward here means sales return. So sales figure 11,800 minus return inwards 1659. So you can see by sales 11,800 minus the returns amount, and the final amount will be going to the final column, that is 10,141. Then comes the next entry for trading account, that is purchases. So purchases here given is, look for the purchase entry. It is given 8,679. So 8,679 is the purchases less purchase return outwards, that is 1380. So you can see here purchases less returns, and the final amount will be going under the final column here. So next entry after purchases, it will be the set entries that for the trading account that needs to be considered. Next is the closing stock. So closing stock, as you all can see, is given outside this box. So closing stock 3,700, that we'll mention on the credit side trading account. As you can see, 3,700 is given under the closing stock trading account. Then these are the set entries of trading account. Now we will go by the sequence and put the entries accordingly, so that there should not be any missing of the entries, and each and every entry that will fall under the trading account or the P&L account will be mentioned as it is, and later on we'll see for the balance sheet. So opening stock, first entry, if you see the opening stock, we have already mentioned, says we have considered. Depreciation 667. Depreciation, as I told you, depreciation is the item for P&L account. So we'll mention it P&L account on the debit side. And commission, since see it is saying credit. Credit means it's an income for the business. So if it is an income for the business, it has to be mentioned on the credit side. But this commission is an indirect revenue. So indirect revenue will be considered under the P&L account. So depreciation under P&L on the debit side, and commission under P&L on the credit side. As you can see here, depreciation first item mentioned here, and commission 211. By gross profit brought down is the first item, but since we are not knowing the gross profit for now, we leave the space to mention the first item of P&L account, that is broughting down the this gross profit or the gross loss. But since we don't know the results for now, so we will keep the space vacant for this thing, and we will solve the further question. And then after commission, it is insurance. Insurance is an indirect expense, so we'll take it under the P&L account. Then carriage inwards. Carriage inwards, as I told you previously also when we were considering the trading account, the carriage inwards is always a direct expense, so we will consider it in the trading account, debit side. So carriage inwards 300, debit side trading account, and insurance on the debit side P&L account. So we can check here, carriage inwards 300, this is trading account. Then insurance 380 on the P&L account debit side. Then we can see furniture. Furniture is an asset for the business. This we will consider in the balance sheet. Printing charges, indirect expense. Carriage outward, indirect expense. So these two items will appear in the P&L account. Carriage inwards, printing, you can see under P&L account debit side. In capital, it is an item of balance sheet. We will deal it later. Creditors, again, balance sheet item. Bills payable, balance sheet item. Plant and machinery also. Return outwards. Return outwards we have already considered when we were preparing trading account. Cash in hand, balance sheet item. This we'll consider later. Then salary 750. It is an expense for the business, and it's an indirect expense. We'll take it to the P&L account. So salaries you can see under the P&L account 750 debit side mentioned. Then debtors, it's a balance sheet item. Discount debit. Discount debit, that means it is a loss for the business. Discount credit, then it would have been a benefit or gain for the business. So discount debit 328, this we will consider in the debit side. Discount you can see debit side trading account, P&L account. Then bills receivable, balance sheet item. Then wages 1589, in the trading account. Wages, you all know very well, should be taken to the trading account. So wages taken to the trading account. Now I can see after wages, it is return inward. This we have already considered. Bank overdraft is a balance sheet item. Purchases, we have already considered. Petty cash in hand, this is again balance sheet. Bad debts, you need to mention under the P&L account. So bad debt C180 already mentioned in the debit side P&L account. So for now, the question, whatever entries are there in the question for trading and P&L account, we have already considered that. So let's balance these two accounts. So trading account balance, you can see 3,403, it's a profit. So we have brought down this profit by gross profit 3,403, as you can see on the credit side. And since we have already mentioned all the items related to P&L account also, so 3,403 plus commission, this is the credit side total, minus all the debit side items. This will giving the profit of 628. So 628 is the net profit after considering all the expenses on the debit side for P&L account. Now we'll take up the balance sheet. See, so when we take up the balance sheet, there are certain items for balance sheet, but you have to first decide that under what format you need to prepare the balance sheet. You will go with the liquidity format or you go with the permanency format. As you can see here, they have followed the liquidity format. The liquidity format, as per the basis of the liquidity format, we will start with the cash and end up with the most permanent asset in the business. So see, it is being starting with cash, then petty cash, bills receivable, debtors, closing stock, whatever item we have missed in the question for the balance sheet, all those we will put in the sequence as per the liquidity. And on the left side, you can see the bills payable, creditors, bank overdraft. And one thing which I told you for the capital is that in the format also I told you that capital in the balance sheet needs to be adjusted with the net profit, net loss or drawings, etc. So for this particular question, there is no other adjustment in the capital account, but there is adding up of net profit, which always has to be done. So capital account will be added up with the net profit of 628, and the final amount will appear in the final column on the liability side. And you can see if we add up the asset side and the liability side, the total balance is appearing to be the same. This is ideal situation which every question should have this, that the balance sheet at the end should match. If it is not matching, which means that there might be certain errors which has been done in solving the question. So go through the question again if this balance sheet is not matching, and try to rectify the error that is being done and make the corrections accordingly so that the balance sheet should tally at the end. So this is it from my side for this question. We will take up more complicated questions in the next session. Thank you for now. We'll meet again in the next lecture with some new things. Thank you.